There is no doubt that this little statement holds true, and it holds true for everybody. One of the great things about trading is the capacity it gives you to change your own life and to write your own script to a large degree. The problem with that is there is always a cost to things. There are always times when things don't go well and they have to be navigated. You have to negotiate your way through these little ebbs and flows that happen with trading. And it is no doubt that for those of us who manage our own money, there are times when trading becomes very, very difficult and where the results you're achieving are not up to the standard you would expect. And what I want to do later on in this is to share some of my results from last year for one of the particular systems I trade on a given universe. Part of the difficulty with trading is that there's no inherent structure. You write your own job description. Everyone would have memories of entering the workforce and being presented with a job description. You knew what the rules were. You knew what your responsibilities were. You didn't have to write them. When you're a trader, you have to write your own job description, and you cannot be wedded to it as a sense of identity. You must be able to have sufficient fluidity to alter that job description when the time comes, and the reason for that will become apparent in a moment. This structure that you generate is subject to external and, more importantly, internal vagaries. Everything we do as traders operates within the backdrop of normal day-to-day life. And normal day-to-day life presents at times challenges for everybody. And it presents a challenge to you in the way you react to those events that are unfolding. And as such, trading demands this brutal honesty that very few other professions require. And in part, this honesty is presented to you every time you open the dealing system. You are told, as your positions are marked to market from moment to moment, how you are doing, whether the account is up or down. As such, each system requires a post-mortem. It requires you to pull the system apart and see what went well, what didn't go well, and then to formulate questions to find out why things have happened in a certain way. I am overly fond of saying that trading is an information management profession. Many people assume that only has one side to it, and that side is that you look at various news sites, you collect various bits and pieces of information, most of it irrelevant and nonsense. You chat to other people on forums, you scribble all over charts, and that's it. That's only part of it. Perhaps the most valuable part is the data you collect on your own performance and what interpretations you can draw from that. If you have no data, then you're simply guessing as to why things are occurring. If you've had a bad 4 months and you have no data as to what trades you've taken, when you took them, why you took them, and you've no process of journaling this, then you're just guessing as to why things have gone the way they are. You can't course correct in any way, shape or form. And this data collection, hopefully, overcomes this tendency we have to delude ourselves. One of the things that must be remembered when you encounter any problem, when you encounter any difficulty, is that the person that lies to you the most is yourself. And the person who generates the most effective lies is yourself. And so hopefully data in some way, shape or form minimises this tendency to be delusional in the way we do things. And this comes back to this notion that trading requires this brutal honesty. And your honesty with yourself must be brutal. So in terms of data collection, I don't have any firm or fast rules as to how, why, what. There are certain minimum requirements. This is just something I snipped off the internet as an image for this particular slide. You may use a program like this, you may use Excel, it doesn't matter. The only requirement is that you must be able to see your system broken down by market, archetype, profitability, time, and that's about it. Once you've got those bits and pieces down pat, then you've got the basis for any form of information gathering that you want. So in terms of applying this lens of brutal honesty, this is one of my systems from last year. This system trades exclusively a basket of about 30 commodities. It's a short-term system. On this chart, you'll see a range of prices ranging from 0 to 110 and a series of bars which have a number on the top and a currency number. That number is the value of the unit price for this particular system at that particular point in time. I unitize my investments because it removes that complication of cash coming into account, cash coming out, and having to calculate the time value of money to compensate for all these inflows and outflows. You'll find if you've got a superannuation statement with someone else, you will get a unit price, and it makes life so much easier. You'll see the system begins well, up 2% in January. It then tails off, and it's a very meandering run down to a final unit price of 76 cents or 78 cents. It has some months where it recovers, but other months where it just goes sideways and slips. Without being able to unitize the account, I couldn't see that. But more importantly, having results enabled me for this system to plot the drawdown curve. There's no drawdown in January because that's the beginning of the year and that's the equity high. And you can see there are some uncomfortable months in there in terms of the drawdown is larger than expected. And there is recovery from the drawdown, but the system ends with a 23.7% drawdown for the year. Within the bounds of expectation for this system. But what the system had done in the past when it had drawn down this much was it did it mid-year, and it gave the system time to recover. And the reason for that recovery I'll touch upon in a moment. But one of the things about writing your own job description is you have to be aware of this. Life gets in the way. And as such, you cannot be locked into your job description as a sense of identity. Therefore, you have to be able to recognize when life gets in the way. And generally, this screams out to you very loudly when you look at things like this. And so when life gets in the way, you have to have a mechanism for pointing out that that occurs. And you have to have a mechanism of course correction. You have to have the emotional fluidity to cope with that. When I've come across these situations in the past, I have a series of questions I ask myself when I do post-mortems. And there's two main ones, and there are questions that flow off from those. What did I do well in the past? And more importantly, what did I do differently this time? Note that without data, it's impossible to answer either of these questions. So you're stuffed. If you have no data, you have no information. You're just guessing. And in terms of my observations, the ability to go back into the past and look at trades individually and to say, well, this was a good trade. What did I do well there? And what were the points that made this trade successful? This is one in particular. This is of the Dow a few years ago. This trade contributed about 100R to this particular system. And you can see the system catches this particular breakout. I've denoted here with the red line. Market then moves up about 8,000 points. in a nice clean run. But it is often not the run that is important. Yes, that contributes. It's very good to have markets that trend and that trend for a long period of time. But it's actually how you manage the move that is the final arbiter of whether you make money or not. And it is the arbiter of whether you make a little bit, you make a bit more than a little bit, or you make a lot. And what I've done here is I've marked up the period I'm interested in, but I've also put in accessory breakouts that occurred along the way. Positions that enabled me to pyramid into this trade quite aggressively. So my first observation is that in moves that were solid and which trended for some time, I would pyramid aggressively. I had my eye on the ball. I didn't drift off focus. I didn't drift off task. And it's not as if last year did not present opportunities. Yes, this particular portfolio is fairly narrow, but there is generally something happening and something that you can make money out of. This is coffee, and you can see the breakout from congestion there at the beginning of the year. Market takes off, moves quite well for 2 months, retraces, then continues to climb for the rest of the year in a very solid manner. In an ideal world, this is, according to the way I plan trades, what this system would have seen. These are the points at which it would have loaded up. So it would have loaded up at the beginning, loaded up for that first red line. That trade then collapses and takes out the initial one and that one. We then have a breakout of that high, breakout of the previous high from August, September. Market then continues on and enables you to go again. So it is this capacity to manage the trade that is responsible for making money. So my trade craft, my trade management for this portfolio was suboptimal. It wasn't up to par because the moves were occurring, but I was not getting involved. Now, why wasn't I not getting involved? Because I had not recognised that life was getting in the way and stopping me. And I'll show you the impact of not getting involved in a moment. And just as a secondary issue, this is cocoa from last year, also an extremely strong trend. So markets offer opportunities. As I've said before, markets are opportunity generating machines. And I failed my own test in that the market would present me with opportunities and ask me a question, and I didn't respond appropriately. But more importantly, I did not rewrite my own job description to take note of that, to say, well, at this point in time, this system is not viable with the way life is going at present. So it is best to put it to bed and move to a more passive/defensive approach. So as I said, too many suboptimal trades. I simply wasn't getting going, but I also forgot the thing that makes this particular system profitable. And if we go back to the Dow trade, there were multiple opportunities to get involved. And again, we come back to that point that it is the trade management that makes the money. So many people obsess about entry, and they spend far too much time dicking about, putting different coloured lines all over the chart, thinking that if they get in at 19,070, that's far better than getting in at 19,060. If your system depends upon those 10 points, then it's rubbish. What is important is how you manage these particular moves as they unfold. And if we look at cocoa from last year, whilst it doesn't have the dynamism of the Dow move, you've still got a market that puts on 1,700 points, and it does so over time. So it's, whilst I don't like to use the expression low volatility, it is a consistent trend. But in terms of forgetting the prime rule of money management, this system has always been profitable because when it wins well, and losses don't cripple it. On this table, what you've got across the top, reading from left to right, are your average R win. So these on average over time. When many people see this, they misinterpret it and they say, well, I'm going to win 3R every time. No, that's not what it says. What it says is there will be times when most trades are rubbish, some are pretty good, some give you losses, and one or two will be spectacular. And it is those one or two that make the money. So if we were to look at this, if we were to look at the column of 0.5R, you can see that this system, even at a win rate of 65%, is not profitable. Whereas if we contrast that with the average win of 3R, you can see that this system is profitable down at a 30% win rate. I'd forgotten this. And you would think that someone who's been doing this every day forever would remember that. But the reason for that forgetfulness will become apparent in a minute, one of the points I want to make at the end. As a result, the average win for this system, it had a negative expectancy, was minus 0.8. That's hardly going to enable me to buy an island. But within the context of things, and as I continually say, everything is based upon context. This drawdown is not within the bounds of expectation for this sort of system, and as I said, it's happened before. Because it is an aggressive system, it does go hard when it gets going. But it can only do that with optimal conditions. A lot of traders spend a lot of time talking about the conditions around trading, even down to the point of what size screen they use, how many monitors they have, all sorts of superfluous nonsense. I have even had people email me and say, on one of your presentations, the chart had a black background. Should I make my charts black? That's an irrelevancy. It's pointless. Because all humans operate within the ecosystem that is their own life. And if your own life is not optimal for trading, then your trading will be suboptimal. That's just the way it is. It's as certain as night following day. So you need to build around you the prime conditions for trading. And if those conditions are not there, then you're going to have to do something about your job description that reflects that. Think of it in terms of being an athlete. If you have an athlete with an injury, you don't continue to give them the same program over and over again and expect it to work. You make modifications. You're sensible enough to modify the system and the program to accommodate what is occurring until things return to what the expected baseline is. And this leads me to the reason for this, I think, in my own case. Ego is a problem for everyone. But there is somewhat of a paradox in trading in that you have to be egotistical enough to think that you can do this, to think that you can successfully surf markets in ways that the majority of people cannot. And let's be honest, the majority of people cannot do this. But at the same time, you have to be able to rein your ego in enough to recognize when things are going wrong and you need to make a change. And when your ego is wedded to a certain identity, and for traders, trading is our identity, you run into problems because you can't be malleable, you can't be flexible. You get locked in on a certain way of seeing the universe and you accept that that is the only way that you can see the universe. Successful trading requires a variety of things. But one of the things I think it requires the most, and one of the things which is ignored the most, is it requires us to park our ego and to put it to one side and to simply say, at this point in time, I cannot do this way. You need to know when to quit for a short period of time to undergo rest and recuperation. You are still a trader. Because you're not trading in a certain way does not mean you are not a trader. And again, we come back to this notion of you need to be fluid and flexible enough to write your own job description. If you're not fluid and flexible enough to write your own job description, then you will run into a situation like this. Ideally, I should have killed this in May, June. And the rest of the year would have just been a coast for this particular system. It would be nowhere near as frustrating as it was. But because I didn't park my ego and thought that I could continue to do it. That's not what happened, as you can see. So the final closing point is ego is a problem for everyone. And it is a particular problem for traders because our ego has driven us to be traders. And we will act to defend our ego at every opportunity if it is threatened. But you have to be grown up enough to realise that you can change the world within which you operate, and it will not mean the end of the world.
Don't forget to like the video and subscribe to our channel so we can keep bringing you new and unique content.